G'day folks, welcome back to Pete's Investing. This is the NIKKEI market update on October 18, 2023. Haven't done a market update on the NIKKEI for a while, so I'll just go through it and just give you a quick update. So you can see here on the weekly first off, it hit this point up here and it's bounced down and just bouncing off the 38% level. And we may see further declines. That wick fell below to the 50% level, but made a bit of a nice recovery, and especially last couple of weeks and so far this week it's a slight bullish movement. Our CCI 150 has fallen back from that high, but it's actually still in a bullish mode, so still a bullish overall on the weekly. On the daily, it's a bit messy here, but it's deliberate. I've got a lot of support and diagonal resistance lines. Now I've got a Fibonacci. We'll talk about that first here. In that smaller Fibonacci range, you can see here it's bounced through that 61% level, and it's now resting around the 50% level on that smaller range. There's a minor support. There's a minor support there at 31,251 and a resistance at 32,650. So it's currently it's halfway between that minor support and resistance area. Now you'll notice the CCI is still in decline, and both the CCI 150 and the CCI 400. We use a 150 as a divergence indicator primarily, and the 400 as a trend indicator on the daily here. So again, there is no divergence to talk of here on the daily, and I'll just remove that Fibonacci to clean it up a bit. Now I do keep these little squares, little rectangles, to show where there was a divergence. You can see there was a bearish divergence here on the CCI between that point, eventually when it draws, that point there to that point, versus the bullishness on the price, and it came down, hit our 23 to 38% level. And it's fallen further below that level, as you see in following days. Now on the hourly, you can see there it's actually broken up down from that minor resistance at 32,650, as we said on the daily, and it's hit our Fibonacci 23-38% level because of this bearish divergence. These divergences are independent generally between the different time frames. So in this case, on the hourly, it did hit that target quite substantially and actually went below the 38% level, and it's currently in that range as we speak. You'll notice the CCI 150 and the 400 slightly broken to the upside, but today we've had a couple of bearish candles, and it's still in decline at still moving quite substantially in a decline on the hourly. So I'll delete that Fibonacci as well as a reference. So you can see if I go back, there's been a few divergence in those little rectangles where they've been hit, both bullish and bearish divergence levels. So overall, I'd suggest we're still in a medium-term decline, a bit of a slight movement to the upside on the hourly, and ever so slight bullish movement on the daily, with that decline in the last few weeks, as evidenced by the daily. So pretty much on edge. The world markets are at the moment sort of on edge with the world events, with the wars in Ukraine and Israel. So anything can happen. If we get a much more substantial happening with world events, Black Swan event, then we're going to see a massive dump, I'd suggest, in the markets, including the US and the European markets, and in this case the Japanese market will see more further declines. So again, we'll just keep a close eye on the world markets, and this is the NIKKEI as a summary for today. So if you got value out of the video, hit the subscribe and the like button, hit that notification bell. Thanks for watching, and see you in a future video.